With today's weekly close, are we posed for a continuation rally on the Nasdaq? In today's video, we're going to be discussing the weekly close for the triple Qs and if we have canceled this reversal candle that we saw the prior week. In today's video, we're going to be discussing the move and the price action for this weekly close on the triple Q and the S&P 500. If you haven't already, please go ahead and like this video down below so that way you could help out with the YouTube algorithm. Also, please go ahead and subscribe to the channel, that way you're not missing out any of our videos whenever they are released. And if you know anybody that would find this video useful, please go ahead and share this video. That way you can be better prepared for the next trading session. Now, without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax. Now let's get into it. Now, the triple Qs, if we are looking at last week's close, not this week, but last week's close, which is this candle right here on the triple Qs, what we saw here was a shooting star. Now, I made a significant point of attention on this candle, and what I had said in my prior video was that if we were to trade down below and have some sort of close this week, we would ultimately have a continuation to the downside, and we would start to trigger different levels down below that we would have to be prepared and literally pay attention to for further selling and hopefully find a support line. That way we can continue to buy back in. However, what I did say is that if this sell-off did not continue, what we had to be prepared for is a buying rally where buyers are starting to take the position and cancel out these sellers from making their move and ultimately drive the market higher. And so that is what we saw today, this week. Now, on a closer time frame, if we look at the daily candles that was produced for this weekly candle that we have here on the triple Qs, if we zoom in a little closer, we can see that it is hugging and it continued to trade and hold support on the 15 EMA. Now, we have seen this time and time again where the 15 EMA was utilized as a support level for the overall rally in the triple Qs. And this time around, it touched once, 1, 2, 3, 4, and 5 times, where it was literally hugging this EMA. And what we saw at the close of this week is near this gap, near the bottom range of this gap. So the gap that I'm referring to is this point from here to here on this daily exchange, an overnight gap that was created. Now, even though we have this buying pressure that was built in and closed high on the weekly candle for this week, we still have this gap yet to be filled, right? So the fill line would be $385.55 on the triple Qs. Now we want to pay attention to this because if this fills, we can either continue or we can use that as a selling point to bring it back to test this once more and hopefully pull back down to different levels of support. And if we were looking for levels of support, we are going to look at this level here, and it's more of a range, so we would want to box this in, right? So this would be typically a trading range, this area right here. And we would want to see how the price would react to these levels and ultimately figure out where the market will trade to. And so if the market continues higher this coming week, we want to see it obviously fill this gap and then move higher on the charts, right? Now, if we were to test levels of resistance, we want to bring the chart back to the weekly chart and first of all, draw and plot out levels of of resistance. So we could see this exchange here between November of 2021 through January 2022. So we could see this level here, and obviously we came close to it the prior week. But if the market were to continue on next week, we can test this level here of 390, and ultimately, uh, we can expect to see much more selling up here at 400, being that it's a whole round number. It is going to be an area of a lot of interest of buyers and sellers, buyers who want to drive the market higher to all times high, and sellers who want to capture this point to finally exit out of the to exit their positions from this massive destruction in the market, right? So what we know from this rally so far is that a lot of buyers has stepped in and ultimately crushed all of the short sellers. So it is possible to see a continuation to the upside at this point, given the fact that we are more than 50% filled of this last week of the prior week's candle. Given that this was a reversal candle, since we are more than 50% above this weekly candle's range, it is more than likely that the sellers who, including me, who had shorts on this week's candle, uh, who exited and are starting to put in that buying pressure uh, within this week's trading session, and will most likely exit the next upcoming weeks. And so, uh, the most important thing though is that as traders, we always have to remember that whenever we are hedging, right? So on this candle, I was taking hedge positions, and ultimately I used these hedge to protect my capital in the event that we were going to sell down further. And so one important thing to note is that whenever you're hedging, right, you're paying into insurance. And insurance is not a waste in your strategy to survive, because ultimately hedging allows you to minimize the risk and capture potential profits if you are right in that direction, right? So you're protecting your capital, you're minimizing your losses, and you're ultimately uh, making your account leveled in the sense that you can survive to trade the next day, right? So that is a whole idea of hedging. But now that we can see that this hedge did not play out, and obviously uh, we did not get a downward sell-off, we need to know what the next trade would be. And so with this being a candle to ultimately cancel out this trading session, we want to make sure that we are starting to build in buying positions to the upside with limited risk, because we have certain points where sellers would be interested to start shorting again. We have to be careful on our position size whenever we are trying to place buys to the upside. Now, looking at the S&P 500, we can see that it remains to be strong, right? So the S&P 500 is more diversified than the triple Qs, being that the triple Qs is mainly tech focused. The S&P 500 has other other industries that make up this ETF to support a more diversified fund in a sense, uh, to uh, to offset any potential risk. And so that is what we saw here today, a continuation to the upside on the S&P 500. And we can see that it is more of a fat doji to the upside um, on the weekly candle, but it ultimately says that we still have potential room to the upside because we are not seeing any selling pressures being built in the prior week or within this week. So next week should be quite positive, especially on the backs that we have major earnings to be reported with Apple. So there is more of a positive outlook in the next few weeks within the next few trading sessions. But once all of the major earnings are finally done, that is when we're going to want to see and reevaluate this picture that we are looking at here, right? So zooming in closer, we have the daily charts. And last week, what we saw was a big sell-off that totally engulfed multiple trading sessions. As you can see here from top to bottom, it engulfed 6 trading sessions. And ultimately, you could attribute that to more of a systematic, algorithmic trading sell off. And that led to a great buying opportunity. If you were buying down here at 451 and you held on to it throughout this trading session, that was roughly a 1% gain on the S&P 500. So that was quite fantastic to see. But during this moment here, when I had my hedge, it worked out well, and I definitely exited out of my positions because I was taking my profits along the way throughout the sell-off. But I made the mistake, because ultimately when I was looking at this, I was actually looking at it as an engulfing candle, which ultimately would mean a reversal candle in technical trading books, right? So being at the high and then you're engulfing multiple trading sessions, you're essentially creating a lot of selling pressure. But in this case, it was not enough to make a continuation to the downside. So with all of the shorts exiting, you got this nice rally on the S&P 500. And if you were buying, you made a great trade. You made 1% on the downside and then another 1% to the upside. So that was such a fantastic session, all right, with all this volatility coming in, which leads us to look at the VIX. Now, where we sit on the VIX is quite interesting as well, right? If we zoom out to the daily chart, and this is something that I really want to pay attention to, we can see that we are still seeing a hold on this upward ascending trend line, right? So we are seeing higher lows, higher lows, higher lows, and then on Thursday, right? Thursday's trading session, it broke down below and then it popped all the way to the top, hitting a high of 15 on the VIX, and then it closed here at 1441. But then on Friday's trading session, being that shorts were covering and the market rallied, we closed right at the bottom once again on this trend line. So what does this tell us? Well, it tells us that there is still potential that the market can still pop and volatility can still take over the markets. Not another thing to mention, if we zoom out, we have this big trend line to the downside, right? And we are starting to create sort of a wedge. And as we can see, that it's starting to tighten between these two trend lines, right? The bottom trend line here and the upper trend line here. So as we start to get closer and closer towards the point, the market will more than likely want to make a move in either direction. We either pop higher on the VIX, which would ultimately mean that we are going to get a sell-off in the stock market. But if the VIX collapse once more, that just means that the market is still proven to be strong and buying opportunity is still there right around the corner. So given that, that is my perspective here on the S&P 500 and the triple Qs and the VIX. These are three things that I like to watch whenever I'm trading. Um, and we just want to be careful, as traders, again, nothing is 100% certain. I did not fully believe that, when I was trading on Thursday, even though I placed hedge, I was willing to take my losses because once I am wrong, you have to just get out. That is the whole point of the game, right? The whole point of the game is to continue to stay solvent so that way you could trade once more. And that is the whole idea. If you can learn to manage your risk, right? Take losses whenever you can and ultimately manage your position sizing, you can survive these types of events. And ultimately, if you're good enough, you can make a profitable trade and make it big whenever these types of opportunities come. And that way, you are not blindsided by the unknown of the market. Again, the market is random and you cannot predict where the market goes, but there are certain things that you can look at that will help you as your edge in the market. So if you haven't already, please go ahead and like this video down below. Please go ahead and subscribe to the channel. That way you're not missing our videos whenever they're released. And we will see you on the next one.